So I'll use the options chart sometimes. They respect trend lines very well too, along with fibs. All right. All right. What I'm gonna be going over today is first just a simple rundown of the 821 EMA, why I use them, the 20 and 50 moving average, and how you can use these in your trading for exits, and then also identify areas where momentum may be dying down for a potential short, or an exit if you're in calls. Um, so, moving averages, SMAs, whatever you want to call it, um, and EMAs. Basically, simple moving average, straightforward. It's the average of the past, let's say in the simple moving average case, 20 candles. EMA's similar, but it gives a little bit more weight to the recent price. So it's more responsive to price changes. So when you're trading, day trading on a 1 minute time frame, the 8 and the 21 EMA can hold some value when it comes to placing your trades, especially being that it is reacting to price and way more responsive to those changes. Um, 8 EMA, look at that as the way I view EMAs and moving averages on the 1 minute time frame, and I guess just in general, the 8 and the 21, the 2050 will go 200 too. Um, the 8 and the 21, I like looking at like the 8 EMA on the SPY 1 minute time frame is like the soldiers on the front line. It's the first it's the first in, and it's also the first line of defense. And then you have the 21. So the 8 EMA represents very short term momentum, and I like using this as momentum in my momentum trading because it's how I trade. I want to trade momentum. It's used to track the like immediate trend, like what's going on right now. So the direction of the 8 EMA is also going to be important when we are looking at price action. The 21 kind of EMA kind of smooths out the minor fluctuations, you could say, and it helps confirm the short term trend. So I look at the 21 as a confirmation of the short term trend that the 8 EMA is showing me. So we have the 8 EMA in front, and we have the 21 EMA behind the 8 EMA. So we have the first two lines of defense, and we have those first two indicators and indications of that short term trend, short term move. A lot of people will use the so here we have 8 EMA as white, we have the 21 EMA as yellow. A lot of people will just play the crosses of the 8 and the 21, and you could 100% do this. I 100% do this sometimes. We always want to see the 8 EMA when there's momentum, and obviously you don't want to enter a trade just on that. We want to be looking at other areas of confluence. I like using the RSI. I like using the MACD. I like using the KST. Jackie Strat fucking bangs. And then once in a while, when I'm in the mood, I'll pull up Calvin's deviations. The 8, 21, and the 20 moving average and 50, when they interact with Calvin's deviations, when we're in a certain area, it can give you an idea of where price wants to go up, and you can also use it as a price target using Calvin's deviations too. So using it all together ends up working out pretty well. So SPY's price action today, I think, is like a really good example of simply just using the 8 and the 21 EMA for entries. I don't just use this for entries though. Like I said, other areas of confluence, the RSI, I really like the RSI being above 50, and I don't like the EMA on the RSI being too far into the bear zone because we like testing that as well. So I like when the EMA on the RSI is kind of, we're pointing up and we're heading, towards to get past that 50. Yeah, dude, the KTRs are awesome. There's some days where I just forget to use them, and I don't always use them, but it's, it's just another area of confluence for me based on the way I trade. And the way I trade it's pretty simple, and I think anyone can do it. And I think a lot of people, and I did this too, and I'm sure a lot of you have done this. When you start trading, you have all of these indicators up. Like I used to have like, I don't know, like 12 indicators. And there's too much data that you're trying to analyze at once. And when you hear people talk about creating your system shouldn't be complicated. Your system should be easy to follow and something that you can also explain to someone in an easy way where it's not overcomplicating it. And like Calvin uses VWAP, and Calvin also uses his deviations, and I'm sure he uses the RSI and the MACD too, and I know he uses the DMI and ADX as well, and I'll usually use that too in my trades. No MACD. Calvin is not a Mac daddy. You heard it here first. He's not a fan of the Big Mac. Not a fan of the Big Mac. So when you have the 8 EMA cross above the 21 EMA, it signals potential bullish momentum. And we're using the 1 minute time frame here. And we're using the 1 minute time frame for the day trades, and we're trading the short term trend. We're not getting into a call at 591 and holding it because we want it to go to 598 today. That's not what we're doing. We're trading the momentum. And there's ways to figure out where the momentum is heading based on its interactions with the moving average as well, which I'm going to pull up here. The reason that I use the 8, I see some people using the 9 EMA in their trading, which is fine. But the EMA, in my opinion, it gives more weight to the recent price action in comparison to the 9. It's not a crazy difference. It's one candle, but it does make it a little bit more sensitive for quick momentum shifts. Because remember, we're trading momentum when we're trading SPY. And that slight difference helps identify the trend change a little bit earlier than it would with the 9. And there's also, when I was watching, I'm recording this, Sammy, so I'll send it out when this is done, probably sometime tomorrow or tonight. I still didn't eat yet today, so I'll have to do that after this. When I was, I learned mostly the way I trade with the 8 and the 21, the 20, and the 50 moving average. It's just basically sitting in front of my computer, watching price action, and just seeing how they interacted with each other. And when I was trying to figure out, why am I not using the 9? I see people using the 9 and the 8. I learned that many people are using Fibonacci numbers. So there's stronger synergy with the Fibonacci sequence. So the Fibonacci numbers are 3, 5, 8, 13, 21, etc. And a lot of day traders are using this in their strategies because they appear in the financial patterns within the Fibonacci patterns. So the 8 EMA aligns with the Fibonacci sequence, and the 9 does not, and it makes it a preferred choice, the 8 over the 9, if you're using a Fibonacci based trading strategy. And a lot of day traders are using the 8 EMA. So I want to be using the EMA that a lot of day traders may be using for their entries, because if a majority of traders are using this, I would like to be using it too. It's more prone to reaction when price hits it, and etc. Why have you stopped using the MACD, Sammy? And now, are you talking in general, or are you talking like in day trading in general? Why is that? Got you. Okay, that's cool. Yeah, Calvin makes a really good point. Um, Definitely, like, I don't use as many indicators as I used to. Very few. I have my reasons for entering, and it's based off just a few areas of confluence when you're building your system. So we have the 8 EMA in combination with the 21 short-term momentum trading. That's what we're using on the 1 minute time frame. And we can also use it on the 5 minute time frame. And a lot of times on the 5 minute time frame, when we're in a trend, um, you'll notice that price respects the 5 minute 8 EMA pretty well. And it's a good way to get into possible entries, also based off of you can be using patterns and structures to like on a downtrend, like a retest, waiting for price to come up to a retest of the 5 or the 8 EMA, looking at what that candle does, looking at the rejection, and then possibly getting into a position just from using the 8 EMA on a 5 minute time frame. We're going to go back to the 1 minute. So 8 EMA, 21 EMA, short-term momentum. So this is to identify the trend currently and also potential reversals. So then we have the 20 moving average and the 50 that I use. And I use the 20, we're just going to pull up the 20 and the 50. Yeah, so the reason I use the 20 and the 50, the 20, mostly because it was in the Bollinger Bands. And when I was first starting to figure out the 8 and 21 EMA, I started watching what happens with the interactions of the 20 moving average to get a better understanding of what goes on with price. Who's sucking on a lollipop? You can hear me. You can hear me sucking on a lollipop right now. Can you actually? No, for real. Can you actually hear me sucking on something? Because I just put a zin in my mouth. All right, I'll try not to. I'll try not to suck on the zin. Sucking on my own toes, soy soy. That's what we do here. Nah, I had the zin in my mouth, but I just moved it so there's no longer sucking happening, because I'll have to listen to that shit. Oh man. So we have the 20 moving average and the 50 moving average. I look at the 20 moving average on the 1 minute time frame as a dynamic support resistance level, and I also like using the direction of the 20 moving average as confluence of the strength of the short-term trend. So we have the 20 moving average in orange, and we have the 50 moving average in this blue color. The 50 moving average represents a broader trend, and it's also useful for confirming the direction of the current trend. I like looking at where the direction that the 50 moving average is pointing when we are in an uptrend or a downtrend. And today, when you see shit like this, right, I just wait with the moving averages. There's just so much going on, ups and downs, up and downs. I like when it's smoother. I like seeing things like this. Smooth downtrend. smooth downtrend. The crossover of the 20 and the 50 can also be an indicator of a possible trend change. The thing is, if you use the 20 and the 50 crossover, a lot of times you miss the momentum on the trade. It happens usually after the 8 and the 21 and so on. So I like using the 20 and the 50 moving average, the simple moving average, as, you know, we have the 8 and the 21 on the front line, and then you have the 20 and the 50 behind it. That is your, basically when you're playing a trend, that's your last area of defense within the trend. And that's how I like using them in particular. When I'm going to pull up the one thing that I like using, and I always talk about the 21 moving average interaction with the 20 moving average. So we're going to pull up the 21 EMA, which is yellow, and then we're going to also pull up the 20 moving average, which is orange. And I'm hoping you guys can see my screen. So you can see that these, the 21 and the 20 moving average, they travel pretty closely. And one way I use the 21 and the 20 moving average is to gauge a possible slowdown of the current trend. Now, when we pull up the 8 EMA, first line of defense, right? We can see here in this downtrend, right? Let's say that we bought puts. Okay, we're trading within this box, right? When you have your moving averages and your EMAs looking like an EKG, it's basically like a consolidation, and I don't like trading that. I like, you know, finding the support and the resistance, and then when the EMAs and the moving averages do what I want it to do, I end up taking the trade. So we had momentum going up here. So we had a cross, right? We had down. So if you notice here, right, we had a downtrend. And in the downtrend, right, it was after this little bit of a bip of momentum. You can tell that the trend is possibly dying down when the 21, so we're going to get rid of the 8 right now. So when you have the 21, so we were down, and then we crossed back above the 20, and at this point here as well, we also had an 8 EMA cross, which I just took away. When you have a downtrend and the 21 EMA is still in front of the 20 moving average, it is telling me that that trend is still strong. When the 21 EMA starts falling behind the 20, it's telling me that that trend momentum is losing speed, possibly dictating a potential reversal. So then we have it potential reversal. And if you simply played this trend line here, that's it. Like, this could have been your play. We have a trend line. We have the 21 crossing, falling behind, and then we had this big green candle right here. And we had the 21 EMA pointing up. We had the 20 moving average pointing up. We have a break of this trend line that is telling me that there is a momentum change in direction. And that is what one of the things that I'm looking for when I'm looking at my trades, is where the 21 EMA is currently, based on the 1 minute time frame and the current price action. When we fall behind, it tells me that there might be a change in trend soon. So if we took a trade here, I also use the 21 and the 20 as possible exits. So if I took a trade here, right, because I saw this, and we also had, in this area, we had the 8 EMA cross the 21, which is more confluence. So now we have the 8 EMA cross the 21. We have the 21 EMA in front of the 20 moving average, and they're both pointing up. That is giving me confluence in this trade right now. Usually what I look for when I'm trading momentum is if I buy here and we start crossing, falling behind the 20 moving average, I usually wait to sell until the 8 EMA ends up crossing down, right? And I want it pointing directly down. If I took this here, I would probably be looking to sell in this area just because we started trading behind. So if I traded this move, and let's say I got in on this candle, right? This candle 594.24, and I sold right here, that is a dollar move you would have gained. So I will use this as also a way to exit my trades on the 1 minute time frame. Now, that doesn't mean that this trend is over. What I saw was this, and I saw this cross here, right? Now, if we pull up the 50 moving average, we have the 50 moving average still pointing up, right? A lot of times when you have momentum up and then sideways trading, I like looking at the direction and how close the splay of the 50 moving average is to the rest of the moving averages and the EMAs. This can end up being your reason not to get out of a play too. So we had a cross here and we had momentum slowing, but you notice when you have the 20 moving average still splayed above the 50 and the 50 pointing up, when you have these little bips down here, these are like little fake outs. Ideally, I don't like exiting the trade until the 50 moving average starts getting closer to the 20 moving average and we have an 8 EMA 21 EMA cross and the 21 crossing back in front of. So this is an example. So if I didn't exit here, I wouldn't have exited because we were still pointing up with the 50 moving average and there was still splay. Yeah, DJ, I downloaded OBS, so I think we should be good, but definitely keep it recording if you can in case I fuck it up, because I might fuck it up. I appreciate you, man. So I like using the 50 moving average as that last area of defense when we're playing a momentum play. So when you have these wicks down and you have the 50 moving average pointing up, and we still have the 20 moving average and the EMA still above the 50, it's a good way of looking at it in a sense of we're probably going to have another bip, right? So when we're trading consolidation like this, I am waiting for these EMAs and these moving averages to figure out what the fuck they want to do. So I'm waiting for something like this right here. A nice green candle and another crossover. If I'm already in calls, I'm still holding because we didn't break this 50, right? In particular. Yeah, there's definitely going to be a fuck up roof. Would you say the crosses of the 20 and 21 EMA are different than the MACD? Well, let's pull it up. That's a good questioning? Very similar. So it's basically MACD in real time. Basically have the MACD on your chart there. Pull this up again. The 50, we have the 8, the 20. All right. So where were we? So we were here. When you end up having a sharp move down, like in this area here, like let's say we bought this candle because we crossed the 50 as well. You come up, you have the sharp move down. We still have the EMAs and the 20 moving average above the 50 moving average. So I look at it as a fake out. Usually when there's a run up, right? If you count, we have, let's see, we'll start here. We usually have 1 pullback, 2 pullback, 3 pullback. Usually on a momentum run up, you'll have 3 to 4 pullbacks, and it's mostly due to price going back down to a support to then go higher. So when I enter calls, I am usually by the 3rd pullback. By the 4th, I'm looking to possibly get out of that. So really looking at the amount of pullbacks that happen within a momentum. Like a first pullback here, it's not scary. I wouldn't even call this a pullback. So we'll go 1, 2, and we'll go with this one as 3. I probably would have gotten out around here if I'm actually using my pullback rule of what I'm looking for. So when you have these entries and you see these quick pullbacks, it's nice using the EMAs and the moving averages and the direction that they're pointing in the display to determine whether it's a fake out or if it's actually going to get broken down, going the opposite way. So far we have the 8 and 21 EMA cross, right? And we have the splay and the direction the 21 EMA is trading, whether it's above or behind the 20 moving average. If you just used today, today, that was Wednesday, I'm all the way back here, let's do today's price action. If you use those rules that I follow today, if you entered here and you exited here due to the crossover of the 21 falling back behind based off of this momentum, push up, that would have been a 592, 596. It's a $5 move, $4 move. Not good at math, right? When we see, like I said, the EMAs and the moving averages doing the waves, I stay out of this. When I say I stay out of this, I'm not trading this. I'm waiting for some type of pattern or a trend line to be broken. So in this case here, we had this nice trend line, right? And just so happens that we broke a trend line. We had a cross of the 8 and 21. And we crossed back over the 21 and the 20, which was confirming a push down when it comes to SPY. And then you can see here, the trend right here, dying down a little bit. We're dying down, and then we come back up. Yeah, I'm using, it's a one indicator but this is the one that I made. It includes my like Fibonacci retracement as well. So it just automatically creates Fibonacci's for me. I like using it on the 1 minute time frame for day trading because as we make a lower low, say, it'll adjust the Fibonacci's. But I don't usually use it on the one indicator. I use, I made a separate one, which was Skydaddy Fibonacci, and I like my Fibonacci's to be away from price so it's not cluttering my vision. Yeah, and I'll link the my Fibonacci that I use for trading, and it's different on different time frames too. Like if we pull up an hourly, we're gonna have different Fibonacci levels based on price action. Same with daily. So it automatically adjusts it for me, so I don't have to continuously draw them. Yeah, adjusting the fibs, that's why I decided I needed to do something about that, because I couldn't stand adjusting them constantly. So I'll put that in chat in a bit. What do we got here? So any questions so far? I also use the RSI and the MACD and the KST to identify like the strength of a trend as well. Usually I'm looking for, I don't like getting into calls unless the RSI is above 50, regardless of the MACD, KST, and I like the EMA also being above the center line. I don't like it when it does this and then it comes all the way back down. The EMA, well actually that was a pretty solid one. When we have, there's some cases where I really like the EMA to get above center line to be comfortable playing the long side, and to be the same for the short side, because I like being below the center line to confirm that that trend is in fact down and I'm going to be looking at puts. Another thing that I do if I'm playing momentum is where I enter the trade. So let's say I entered this trade and I entered it off of this little, I love these on SPY, I love playing these little bull flags, that form. Love playing these little bull flags. Also confirming the possible shift in trend, right? So I like playing these little bull flags on the 1 minute time frame, same with bear flags, these little bear flags for entries. If I were to get into, say, this break here, this candle, I'll take a anchored VWAP and I will anchor it to that breakout candle and I will exit it. You can also use this as exits, is when we break below it and close below it. I'll use that as a possible exit as well. So I look at the momentum candle, right? We could have done it with this one too. Let's say I entered puts here, right? Here, right? I would have known that we're probably going to break it based off of these candles here, right? You know, if I did this here, pretty much aligns, would have rode that. It's kind of sideways price action though. So I use that anchored VWAP when I get into trades to, you know, also determine a possible exit. And if we were looking at, this was this morning. If we just, this was the top here, right? I would have known that we were most likely going up by these candles right here. We had this nice big candle here. We broke this bearish candle, closed above it. That's also an entry. So you can be using candlesticks too for your entries. Yeah, I like using the fibs. Let me see if I can get the about the script. I'll just get the link to it. I'll just put it in chat for you guys. You guys can use that, so you don't have to constantly be messing with your shit. So we went over the 8 and 21 EMA interactions, the interaction that the 21 EMA has with the 20 moving average to better gauge the current trend and the possible shift in trend, and then also the 50 moving average as being the last area of defense. Do you guys have any questions right now? Any questions? Anything? All right, very cool. I'm glad I was able to clearly explain it. When you have a downtrend, right, this is also something to look at. You know, we had this nice breakdown here, big breakdown. I like looking at these patterns, like little bear flags, but also they're basically H's, right? So we have an H, right? We have an H pattern, right? We have an H pattern. When you're in a downtrend, I like using the retest of the 8 EMA if I didn't catch the actual breakout as an entry. So I'm looking at these little H patterns here, right? And now when you're on the upside, they're basically bull flags and bear flags, just little, but they look like H's. On the opposite side, you would have the opening gap run up. That's a good question. I don't usually play that. I guess you can see, like today we, you know, kind of just filled the gap here. I don't usually play that. I don't like trading like the first half hour of the day, because I like price to form some type of pattern or structure I could go off of. So if like today I didn't trade the first half hour and 10:30 or 10 o'clock was right here, and I at least had something to go off of waiting. So I don't like playing open. I don't usually play the gap rule unless there's like, it's like right at a golden pocket or it's a Fibonacci that we could bounce off of. Yeah, M's and W's. Soy. M's and W's. Big M's and W's. Usually when I'm trading, my chart looks like this. I try to zoom out a little bit more. And the reason for that is price action in the stock market is made up of basically patterns, and those patterns are mostly M's and W's, right? Right? Now this would be a bearish W, and you're going to play that for a short, but there's also M's within W's. Right? So we have within this W, this bigger W, we had an M. Right? So we had here, here, here. And the way to play this is breaking the neckline, which would be right here. Right? You break that neckline, you can get into a quick scalp, or more so, usually at a rejection, which is basically like a double top. an M, but they don't always have to be symmetrical and parallel and lined up. It could be a lower high in that situation. If I already see this pattern as an M and I see this candle here, this rejection, I know that we're probably going to break this neckline and it ends up forming a W or a full M. Droopy M's and W's, exactly. All of this is, Bye Bye taught me a lot about this. The price is just mini harmonics within larger harmonics. You can find little M's and little W's. Like here's a little W here. Right? Yeah, 1, 2, 3, rejection, and then we went up. So the W actually looked like 1, 2, 3, 4. W looked like that. And if you were to take a trend line, run it all the way across this way, even like this, you would have a direction on where that W could possibly be going based on the top of that W. Bye bye shorters, baby. Yeah, if you like zoom out, you can just see giant M's and W's. Like if we go to a 15-minute time frame, we're gonna get rid of this here. Fuck it, we're gonna go hourly. Just big M's and W's. So we have, let's do 4 hour. I don't like the 4 hour. One, 2, 3, 4. And then if we take a trend line, draw this trend line here. Right. Maybe we go down a little bit lower. 579, that'd be fucking crazy. We could take this here, connect it to this. Right. If we see on the hourly time frame, a nice green candle, the way you can play this, because prices are just going to go all the way up, is the break of this neckline here. I would play this W, punch me more upside on a higher time frame. You remember Bye Bye was original and cool. Roof, you always, now he just has a bunch of posers. It's fucked up. Roof's always hating, dude. Roof is always hating. He just lives for it. Okay, thanks, Roof. I will proceed now with your permission, you dumbass. Thank you. Thanks, I appreciate it. I hate teaching people, so I do it. I hate teaching people, but I teach people, which doesn't make any sense, but I hate it. I teach Muay Thai and Jiu-Jitsu 4 days a week, after market hours, and then I have to come in here and teach people like Roof, which, Roof is a very special person, and mentally and physically. He looks like Lieutenant Dan started walking again. All right. Lieutenant Dan if Roof looks like if Lieutenant Dan got Neuralink and Neuralink actually worked on his paralysis and he started to be able to walk again. Yeah, I never I never smoked like a day in my life, and when I started trading, I started doing nicotine pouches because it helps tremendously with focus and calming the mind. So I am addicted to nicotine now because of the stock market. Basically, it's Jackie's fault for nicotine addiction. Lieutenant Roof, you need to change your name now. It makes the most sense. Yeah, if you're going Jackie coming in frick off. Bro, if Jackie fucking heard his name all the way in Canada, just pops in. What a weirdo. Bro has my house mic'd. That's so funny. So again, from what I went over with the interactions of the 21 EMA, the 20 moving average, and also the 8 EMA, the 21 and the 50, do you guys have any questions about that? And how I use it in particular? Because I basically went through my style of trading and what I look for entries and exits. So yeah, you might not have been here in the beginning. So for people that weren't here in the beginning, I went over like the difference between simple moving average, exponential moving average. The simple moving average is just the average price straightforwardly of the last X amount of candles. So if we're using the 20 moving average, it's the straightforward average of the past 20, right? When you're using EMAs, it's similar, but it's giving more weight to recent price action, and it makes it more responsive to price. So when you're day trading on smaller time frames, you're able to use the 8 and the 21 as it represents very short-term momentum to the immediate trend on these smaller time frames. And you can also use it on a daily too. The 8 EMA representing short-term momentum, and the 21 EMA smooths out the minor fluctuations that you have with the 8 EMA. Like you can see the 8 EMA, will bounce up and down, where the 21 is a little bit smoother. And it helps confirm trend. When the 21 is still smooth, it helps confirm the trend that we're currently in, and that's the way I use it and the way I look at it. And the crossovers of the EMAs it indicates potential trend shift, and it's extremely useful for those quick momentum plays. And also, where the 21 EMA is in comparison of the 20 moving average as well. When we have that 21, cross behind price, we know that price is settling. And a lot of times when you see this here, we were in front and we fell behind, we get consolidation. And that's what if I didn't catch this, right, I'm looking for back tests, right? These areas here, back tests, or I'm waiting for this consolidation phase here and the potential breakdown to enter. Basically, I'm waiting for the 21 EMA to fall back in front of the 20 moving average if I didn't catch it all the way up here. Yeah, missing stack, exactly. Yeah, and like I don't just trade off of this. I like if I enter a long position here, let's see, this is at like 10, 11. I like pulling up like a 5-minute time frame. We see where we're at 10, 11. So about right here, 10, 11. And I like looking at the 5-minute time frame for possible areas where I would sell if we reject with a red candle. And I also like using the 15 minute. If we look at 10, 15, so this area, basically if I use the 15 minute as a guide, we rejected the 50 moving average. Right, and this would have been okay, maybe it's time to sell. We can't close above this on a 15-minute time frame. Riley. I mean, yeah, you could use this on any stock. Was it RILY? I guess it's options. We're not doing that. We're going to do all. it's going to be dependent on price action, but let's see. Riley doesn't move that much. Like you have, I mean, this is a decent move. It's like $1 something. So yeah, this is what it looks like on Riley. 1 minute time frame. You can see basically like everything just followed similar patterns to SPY today. So, I mean, obviously not playing options on Riley. It's trades at like $6. But if you were, playing just shares and you were looking for, to make $50, $60, you can use the same strategy. I like using it on the daily as well. That's a fucking stupid candle. So on a daily time frame, if you didn't get this, what you wait for on an uptrend is price to come back down and react to the 8 EMA on a daily time frame, which is right now 475. So if you miss something, you just have to be patient and wait. And I think BABA, a good example of this. You see how on the daily time frame, since we've had this breakout with BABA, what has price done every time we've tested the 8 EMA, and in what direction is the 8 EMA pointing along with the other, and also the 21, we're pointing up. So if you didn't get this entry down here, it's good to be patient and maybe just wait for a retest of the 8 EMA to possibly get into a long position. And if you play this test of the 8 EMA, that was a pretty decent move up. We had a test here and we failed it. And that was also a pretty strong move up. So if I was looking at BABA and I'm looking to play options on BABA, like weekly, I'm just looking for price to get back down into this area, and then I would go to a 30-minute time frame, hourly time frame, to get a better idea of what price did when we hit that area. Right? Bigger time frames, Jackie. What time frame do you want me to use when you say bigger? Do you want daily? Do you want hourly? 4 hour? Yearly? Fuck off, soy. But yeah, my own. Yeah. So we'll look at this time frame as well. Just going over like a 4 hour time frame. We had us fall behind with the 21 EMA, right? But we had an 8 cross here. We had a splay on the 21 and the 20, and it showed nice momentum up. And that's on 4 hour. When we were in a downtrend, right? We fell behind the 20 moving average right here. Price settled a little bit. We had a cross of the 8 and we came up. You can see the same thing. It usually when the 21 and the 21 ends up falling behind the 20, we get that in-between price action. The daily with the 8 EMA, yeah. I like using the 8 EMA on the daily. Especially with back tests. I'm just going to clear all my drawings I had here. So it's clear. Yeah, it's I'm recording this, so you'll be good. So we'll just take off because I like using the 8 EMA a lot on the daily. I'm just going to take off everything else. So I'm just going to have the 8 up. And when we're in an uptrend, I like using the 8 EMA on the daily as a possible entry if I didn't catch it down here. Retests. And we'll pull up the 20 and the 21. You can see similar. We fall behind. Then we have a cross. Then we have the 21 back in front of the 20. Then we have an uptrend. Right? We fall behind. Downtrend starting. We have that cross here. Downtrend keeps going, and we're respecting 8 EMA, 21, and the 20. If we pulled up SPY on the daily, right, you can see how we interact with the 8 EMA as well when it comes to a trend. Today we came up, we tested it, back down. We have a cross here. So as of right now, the short term looks like a lower, especially with that fucking candle, Jesus Christ. Yeah, the Bollinger Band center is 20 moving average. Jackie, does this answer your question, what you're seeing and what you're looking for? Yeah, I enjoy it. It's like I said, if I didn't learn this from anyone, I just watched price and I noticed that certain things happen when the EMAs and the 20 moving averages end up interacting with each other. So right now, I mean, if I'm just looking at SPY's daily, we're just rejection, and we have the everything just pointing down. We're splayed pretty well. So this thing's a fucking funeral. Yeah, speaking of a scammer, if you guys haven't donated to Jackie recently, please donate. Yeah, moving average, simple moving average. I just say moving average because simple is just another word that I don't want to include. It's too many words. Way too many words. I'm just going to draw that trend line while I'm here. Fuck it. I wonder what it looks like on a weekly time frame. Well, all right, we lost the 21 on the weekly. That's cool. We got 580. Ugh. I never looked at it on the weekly time frame, and it's the same thing. Look at the way this thing fucking moves on a weekly time frame when this shit happens. Damn. What's interesting is the direction that the EMA and the 21 is pointing, along with the 20 right now, all pointing down. Guys, we're gonna die. Very interesting. Yeah, I know Jackie uses the 48 and the 200 EMA. I just stick with the 50 moving average on the 1 minute time frame. It holds a little bit more weight, in my opinion, when it comes to like support resistance. I just like having that up on the chart. 48 works. Yeah, this is interesting. It looks like we have a what? Oh no. Oh no. Oh no. Basically break this neckline. What happens? What happens? This works also like really well with. I use this with like Jackie's strat too. I don't have Jackie's strat up. I just use the KST, the MACD, and the RSI, and I like using on the 1 minute time frame as well. What is going on right now? I don't know who that was. So like Jackie Strat with this. With the KST here. I like using Jackie Strat and then also the confluence with the EMA strategy as a reason to get into positions. So we can see we had KST cross below center line here, MACD cross here, above 50 here, EMAs do its thing, moving averages do its thing, it's confluence. Then we have these nice little 1 minute bull flags that I like seeing. Then also the little H's, little bear flags for breakdowns. I don't normally try to catch the breakout too. I try to play a back test or wait for a pattern to develop like this to get into my entry. Yeah, I would recommend getting the just one. Like this is the one indicator, and all I did was I put in a basically a level that I was using for a little bit, so I didn't have to keep looking at the RSI. But basically, if the RSI higher flash level, we're gonna do 65. My box level, we're gonna do 35. And this is what my chart would look like if I used it. Basically, the red indicates that we're above the 50 when it's here. When the white ends up going off, that means that we hit 35, trading below it. And that's the only thing that I really added to it. It's good for reference. I don't use it. It makes the screen too stupid looking. Yeah, I would definitely recommend using the one indicator to rule them all. You at least have a little bit going on here. I hate that this is still up. It's literally the same indicator, and the only difference was I programmed in the flash levels for the RSI, so I basically had an idea of when the RSI was, you know, hitting the 50 range and above the 50 range, and so on. But if you wanted to, you can just like use 65, 35, right? And I know every time that we have a flash of green, that the RSI, without having the RSI up, we're in that zone. When there's a break, we're out of that zone, back in the zone, and we're out of that zone. And then when we're white, you know, 35 out of 35, 35 out of 35, 35 out of 35, so on. But I don't like using it. I did at first. This is like a year ago, but probably 8 months ago. I just don't like the way the chart looks with it on. Yeah. Or what other questions you guys got? Did I explain everything thoroughly? I try to make it as simple as possible. Because I think that your strategy should be simple. I don't think you should. I've overcomplicated things. I've tried using too many things at once, and I just think things should be simple. And I think if you guys were smart, like myself, geniuses, you can just straight up use Jackie's indicator. You don't have to do anything else. Like just Jackie's indicator. It's a simple strategy and it works. And that's why I trade the way I do, because it works for me. I understand it. It's simple. I don't have to be looking at 50,000 things at once. That's how I feel. Don't need to have 70 different indicators up. Just think the MACD, RSI, your main ones. If you use Jackie's strat, the KST, it's always best. You just have to be you just have to learn to be more patient when trading SPY. Like I said, I don't like trading the first half hour. I don't usually use like the gap fill rule. Like I said, I just don't. I don't use it. I like waiting at least a half hour to have something to go off of, a pattern, anything. And like if you take today for an example, like I could have gotten into this today, right? We had that nice cross here, but like one of my rules now is I just like waiting the first half hour. I like waiting for something to develop, and we had like developed within the first half hour. We had this trend line here. So if I just waited the first half hour, I could have played this, and I did play this actually. So I like waiting the first half hour, and then Jackie's hourly rule is also simple: the high and the low of the first hour. I don't, when I see like the hourly, after the first hour, when there's days with SPY and it's like a $2 range, I just know that the day's most likely going to be choppy. I like at least there being like a $3 range to trade within, because I look at the first hour too as this is the range you're going to be trading in the first hour, right? So we had an $8 range. That tells me that within the high and the low of the first hour, there's going to be price action happening, and it's probably be some good price action. If you use Jackie's like rule, even towards the end of the day, right? We broke that low. You could have played that. But I like there being the range in between. I like there being like a, at least like a $3 range to trade with. Because if you take it to like Monday was 600. Yeah, another good day here. But we've had those days on SPY where it's just absolutely stupid. Was it Tuesday? Like here's one on Tuesday. We had high, low the first hour. Like this shit right here. I don't trade this. I fucking hate this. 611, 609. Like the first hour of the day. $2 price range. You're just trading chop. And just barely moved. So on days like this, I take a step away. We're trading in a $2 range. I don't want anything to do with it. Because I don't want to just trade, above the high and the low. I want there to be, $3 to $4 in between the high and the low that I could trade. So I know that if I'm playing momentum, there's, some room in between. Yeah, I think Jackie's hourly rule is a good one. And I think the hourly rule is especially good for newer traders because when you see that you're only trading in a $2 range, you don't end up getting dusted when you're trading in between that price action. I'm just checking up on chat. Oh, thanks, Ruth. I'm glad you're back. I'm a little behind, but really happy you're here. Yeah, you need your own. So what's really cool about? I'll play COD after this if you guys want to. I'm down. Like it's crazy seeing like so many people trade SPY every day. Like Calvin's a good example. Jackie's a good example. And the amount of success that we all have with trading SPY, yet we all have different systems of trading. Jackie's a harmonic guy. Jackie's autism is more on the spectrum than most people, so he can identify, pretty patterns, unlike most of us. I can see M's and W's, and when I see M's and W's, I go, it's probably a harmonic, and I'm going to play it, and I don't do any measurement, but I just don't trade off of that. But it's crazy seeing that everyone has such a different approach to trading, different indicators, different styles, yet, we're all successful. And I think that is not all, but some of us successful with it. And, seeing Calvin's insight and Jackie's insight on SPY, like when Jackie's seeing a harmonic, I take that into consideration. Sometimes I don't play it just because it... based on like my own strategy, my own rules. We might be in a downtrend and I don't think that, price is going to necessarily go up too much from there with all of the resistance above. So I'll just wait for the price to get to a certain area and then maybe get to a short based on my strategy. But yeah, everyone has a different system and different style of trading. And I think Jackie's made things pretty simple for you guys if you just follow his indicator rule with the RSI, MACD, and the KST. It's those things bang. They always bang. Not always, but 80% of the time I think it is. Right? Yeah, I use the 50 moving average because when you add 5 plus 0, it equals 5. And when you use the 48 EMA, you have to do math. And I don't like using numbers where I actually have to count on my fingers to figure out what the whole number is if you added it up. The 48 EMA is going to be a little bit more responsive to price action in comparison to the 50 moving average. Yeah, right now you have, in this case, so when you see a fall behind, when you're in a downtrend, you end up getting, this type of price action. That's where you want it, play. If it breaks back over, you can play the put. Right now, you do have the 21 EMA pushing back front of, and you'll notice what happens when, let's just zoom in. We were behind, right? And as we push back in front, you see the momentum that happens when we push back in front. Like we push back in front right here, it's just big red candles down. And that's what I'm looking for in like entries if we're already on a downtrend. Yeah, I know people that use literally nothing and they play patterns. Like on a 15 minute time frame. They're just looking for patterns. That's it. This is interesting here. Might go lower though. Yeah, I know. I mean, there's some people that just like you could trade SPY just playing structures and trend lines, like straight up on the 1 minute. Like if you were trading SPY based off of patterns, right? Like you would have seen this, right? We had this here, little break, retest. Then we had this. We take it from here. We go here. Right? All these little patterns. Structures. You just play this. Like you can trade SPY like this. There you go. There you go. You play this. You broke that, retest it, down. Look, another one. Here we go. Just play trend lines. Yeah, Jackie, as usual, makes good points. Just be good at a few things. Like understand something. One thing, just use the RSI. Get good at the RSI and understanding of the RSI, what happens when we're in the zone. Like I said, I don't like, I'm more comfortable taking a trade when the EMA is, pointing straight up when we have a breakout and I know it's going to be trading above the 50 for calls. Like I like taking calls only when we're really trading above the 50 on the RSI, at midpoint. Like I don't want to get into calls usually down here. I want to wait a little bit, like up here. Wait for retests too. You can That's what's cool about the RSI is if like you miss breakouts, you could just use the retest of center line or the EMA. See the price likes or the RSI likes testing the EMA. So you can just play those retests. And if we retest and we break, we respected that as support. And look what, we come down again and we break up. We come down again and we break up. And now we broke down. And look at now it's resistance. So you just play this down, 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 up. Yeah, I don't have like most of the time I have like it if I have like the EMAs and everything up, like I don't usually have this on my screen all day long. Like I know there's a downtrend, right? And usually if I'm already in like a like say I ended up getting into it here, I have an idea of where everything is at, and you know if we start breaking up like this, that's when I'll if I start seeing this come down and break up, that's when I'll pull up the EMAs to see what they're doing. That's usually what I do. I don't have them up always. It becomes a pain in the ass. It fucks with my vision. But usually I'm just watching price and looking for structures to break. And then I'll pull up like EMAs to get a better idea of when I should get into that. You guys have any more questions? 1 o'clock on SPY. All right, let's see what we got here. 1 o'clock on SPY. You are expecting a reversal. Well, if 1 o'clock, right? So we have right here, 1 o'clock, you're expecting a reversal. We had this area right here as resistance above. So to confirm like any type of reversal, I would want to break out of this box here. That was at 1 o'clock. What the EMAs and the moving averages told me, if I had this up, we fell behind, we traded the chop, right? We had a cross of the 8 EMA, well, we're now in front of the 20, and this is telling me right now that we're probably going to go down. That's where like the EMAs come in too. I don't know the calculation moving averages. I just know it's the average of the past whatever candles that you're using. 130. Yeah, 130 was chop. It's like this right here. I would have wanted to see like to confirm like us going up more. Like if I was looking for like calls, I would want to break out of this right here. At least. For more upside. Is Jackie hitting you trick questions or what? So yeah, at least you know for tomorrow that you have this very large area here Red. And then I don't even know where the fuck we are. Half hour time frame. Got do this here. There's boxes everywhere. There's boxes everywhere. It's a fucking Amazon warehouse here. See, I mean, if we come down, oh, that's nice price action here. Jesus Christ. Did we fill the gap today? We didn't even fill the gap today. We still have like, Jesus Christ. That rules. That's cool. 584 is the gap. Is it? Looks like 582. 36. Or do we already come down to it? No, we're here. 582. Yeah, right here. 582.29. Yeah, that's what it looks like for me, at least. Maybe I'm seeing something wrong. What happened to my chart? Oh yeah, 584. Yeah. Hourly looks different. Yeah, it looks like it's down here. Maybe we go lower. I'm gonna assume that we just go lower. Yeah, I don't know if there's any other, I haven't checked to see if there's any other gaps on SPY down low. We have this little guy here. Yeah, we have this little one. Oh, right there. 536. Imagine. What else do we got? Alright guys, we're heading to 441. I'm calling it. 446. That'd be wild. That's a long way to go. Long way to go. I mean, you did have this M pattern play out. Right? 2, 3. We're playing this out now. Broke that neckline right here. I mean, I would just assume that if we break under this trend line, that we end up just heading down to that 575 area. This trend line here. In this zone again. The Jackie Irish goodbye. Yeah, I mean, I would just look at, you know, we have this area here where buying happened at 580.99. This candle here, 580.91. Got a bib up. We had this here. Actually, I'm gonna mark these right now. There it is. We break below 583.97. Our next area, 581. Pull up the half hour. This is always fun. Beep up. We're gonna have 588 potential. Yeah, no problem. Spy definitely did the Irish goodbye today, for sure. All right, guys. Any other questions? I didn't eat yet today, and I would like to get some food to eat. It's like 8:30 at night, but I'm down to stick around if you guys have questions. Yeah, I would watch that 584.09 area on Spy tomorrow. It was a support and then it was a resistance. Yeah, no problem, dude. I hope you guys learned something. I hope I made it simple. It's just something easy to look at to determine, entries and exits. And I know a lot of times people struggle with when to sell, and it's using the interactions with the EMAs and the moving average can give you an idea of what can happen with the trend in that area. Soy, after I'm done eating, we'll get on COD if you're down. Yeah, no problem, guys. I'm gonna figure out how to get this recording, and I'll post it in the Discord so you guys can have some reference as well to review it. Soy, it's a fish. Cod is a fish. Yeah, I hope you guys took some from this, and in your trading, hopefully it's beneficial. Use it somehow. Be back with a Lambo. Yeah. I'll see you tomorrow. I think tomorrow's just going to be another. You have some upward price action, but I feel like we're going to have some. It's going to be interesting. Actually, going to put this here. 587. Yeah. That makes sense. Got something in here. Cool. All right, I will. I'll see you guys in Discord, and as soon as I get done figuring out this video thing, I'll post it So you guys have it. Hope you guys have a good night.